Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts Joel Elconin
This is a volatile puppy here, isn't it?
and Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin. Busy Monday morning. You know, I'm never quite sure if a Monday morning is going to be news desert or news flood. And this morning we have the latter. Kind of had a hunch when you got the headlines last night that the trade tariff deadline had been extended. Between that and Trump tweeting about oil this morning and some M&A news, we have a lot to discuss. So we'll roll right into it. And today's guest, we have a new guest on today's show, Boboch, a portfolio manager and market strategist at Roppell Capital Management. She will join the show at 8:35. But let's roll right into the show, Joel. Give us an update on the overnight session. I assume we're up.
Yeah, green on the screen, Spencer. Very, very strong close on Friday, as well as after hours action took us even higher. That has continued this morning, trading just off the highs of the pre-market session, which is 28.05.5. I don't have any real good resistance until our December 3rd high of 28.18 on the downside mid-range on the session's 2,800 and the close way down at 91.25. Oil was doing okay, and then we'll talk about the Trump tweet, but we have oil down $1.15 here at 56.11. And boy, it is getting back down to the bottom. Let's see, it was the top of the trading range. Let's see if 55 will be support. That's another $1.11 away. Gold in the red, silver just slightly in the green. But Spencer, you mentioned, I was thinking, last night we're looking for news. Maybe we'll talk about Barron's. Maybe we'll talk about all the earnings coming up this week. And holy moly, where do you want to start on this busy Monday morning?
I just had a feeling that today would be a busy morning between especially with the China headlines last night, but also yesterday when I was watching the Michigan State game on CBS. Joel, I'm sure you're at the game, but on TV, they kept advertising for 60 Minutes last night was going to be about Chinese autonomous cars. And so I knew that meant NIO. So I had a feeling we'd talk about that this morning between that. And we should probably start off with the tariff headlines from overnight, that the deadline, the March 1st deadline, which I think deep down we all thought was a soft deadline. Yes, it was a very soft deadline. Has been extended. They're making progress, and China across the board is up this morning.
China, yeah. What do you want to do? We want to go NIO. You want to go these hot Chinese stocks that are back in the spotlight?
Yeah, I mean,
where do you want to?
Let's go with the high flyers this morning are Huya and IQ. JD, Billy, so like almost like high-flying Chinese tech names that are like the most apt to run are running here this morning. So like, I mean, just look at HUYA here. You can just see it. It's
Hey, all right, I'll just give these stocks had a good day on Friday as well. So if Dennis was here, he'd be saying, oh, the 2-day move. Well, the 2-day move is in full force here. And just this is like deja vu all over again with these stocks, right? Yep. They had their major run. Just look at the highs of the pre-market sessions for Huya. This got up to 26.50. Try and find a daily level that coincides with that or a weekly level. IQ trading at the highs of the pre-market session, 29.70 is your pre-market high. You have to think about $30 on that one. And then who else fell into this category when those stocks? Huya, IQ. Anyways,
Billy,
JD.com.
Billy, Baidu, Baba, Weibo, Sina. There's about a dozen or so that tend to all trade together.
Yeah, they do. But let's go to that NIO and the specific news. That was pretty well telegraphed, on Friday. Like everyone and their brother knew that they were coming on the show, or they're going to be on 60 Minutes. And I guess it's one time you just kind of buy the news on that one. Did they say anything specific?
nothing new. And it's funny because when you hear a company is going to be on 60 Minutes, you're never quite sure is it going to be a really good story or a really bad story. In this case, I feel like usually it's a bad story. In this case, it was a really good story. They had interviews with the CEO, and they didn't say anything that we didn't already know about the company, but it was a mainstream. It was bringing it to a mainstream audience. So nothing new really, just how amazing the company is, and they're going to build all of our cars.
All right. It's so kind of a new IPO on this one, right? So we had that run up to 1380 the first month of trading, and then you got a chance to buy it under $6. So really, it came down hard through this area. So this is a first reference point. I'll just say you found some sellers at $9. 902 is your pre-market high. That's up 61 cents in the session. So you want to see follow through that $9, $9.50, whatever. But I'm using that pre-market high as a potential resistance point.
So we have China in the news today. We also have oil. And Joel, you and I were talking on the pre-market show. I can't remember the last time that Trump tweeted about a specific company. Remember, those were the days, right? 2017, 2018. Trump would tweet about a company. It would sell off a couple percent points and come back like the next day. We haven't really seen that of late. But this morning, Trump decided that oil prices are getting too damn high, and that's what he tweeted. Not those exact words, but he said oil prices getting too high. OPEC, please relax and take it easy. World cannot take a price hike. We're fragile here in the oil markets.
Do you see this chart here? I mean, the bears have just got control of this thing. Step down sellers in crude, and as I mentioned, I mean we're at 56.01. That's down $1.25. I mentioned 55 was the top of the range before. Let me see if all right, I got a couple levels ahead of the 55. You had a pair of lows last week. Actually, last week's low was 55.66. And current low is 55.90. So there you go. You're moving in on last week's low in crude oil. And you know what? The reason I don't think he tweets about stocks anymore is I think someone came up to him and said, "Don't tweet about stocks anymore. You're president of the United States. You can't do that. You can't say, GM or Boeing." And if you go back and look at those negative comments, like stop building the Air Force One.
Yeah.
Was that one of them?
Yeah.
I think that's the last time you got the chance to buy Boeing, like at 150 or 200. I can't remember how low it was.
Yeah, I don't even remember when that headline, when that tweet hit, and I don't have the patience to dive through 2 years worth of tweets to find it. But yeah, I mean, he used to tweet about it was Boeing, it was GM, that there was a number of other ones. Yeah, he tweeted that the cost of Air Force One was too expensive, right? And
cancel it.
Cancel it
now.
Right. He hasn't been doing that these days. So this tweet this morning about oil, I think, caught a lot of people off guard. And it's funny because oil has been really hot.
Yeah, it did. It's had a nice rally, and that rally has stopped here. Well, should we dedicate the next segment to Dennis and General Electric? William in the chat says Dennis would have talked about GE for 10 minutes. And we're going to talk about it for 20. Oh, my gosh, up $1.75. Holy Toledo. Spencer, give us the news on that issue.
Yeah, they're doing what everyone's been saying they need to do. They need to sell some assets, and that's what's happening this morning. They're selling their biopharma business to Daenerys for $21.4 billion. I think coincidentally, Buffett, around the same time that this news hit the tape, said that GE should sell assets, which is exactly what they're doing. And that's what people have said. They need to sell. They need to raise cash somehow. And so
and they're raising a lot of cash. And this one, I like to look at a bunch of different charts over the weekend, and I put a note to self and said, wow, 5 days GE has only a 33-cent range. I'm like, man, this thing probably should move. Maybe I should put a straddle or strangle on this morning. Now I think I'll just take it off my screen because approaching $12, up $1.75, up 17%. I mean, you want to use 12 as a whole number? You could use 12 as a whole number. I don't know if there was any daily highs there. Let me take a look, but this is probably one of the best days ever for General Electric. Yep, let's see, we got something here, 1173. Really nothing. 1228. If you're super bullish here and you wanted more meat on the bone here, 1228 was your high on October 25th. After that, it opens up to the upper 13 handle, or excuse me, upper 12 handle. I see a trio of highs. Let's call it 1270. And Spencer, I just want to mention one more thing. This is just from an educational standpoint. A member in the chat here, I was doing a private chat with them this morning, and we always talk about pre-market and extended hours, and they wanted to buy some NIL, after hours, and they had never done on their platform. And another chat member, told them, I think he asked them and said, hey, you got to hit EXT for extended hours. And the other trader was like, man, I've been putting orders in all this time. I don't even know if they went anywhere, but he did get some NIO. So just a shout out to the chatters helping each other learn about the markets. But if you want to do the extended hours, yeah, you got to put that EXT in there in the filter where it says, good to cancel, day route or whatever. But
what
chatters helping these other chatters out.
And
if for Dennis, I'll say the 666 low. It looks like it's going to hold up for quite some time, or almost what's a double of 666? Like 12 and change?
1322.
Yeah. Oh, nice air mat there. But yeah, I don't know what to say about GE. If you're short, I don't know what to tell you. If you're long, this is a big windfall. I mean, for this to fill the gap in GE, you're going to have to wait a long time. I don't even know if it come back down to 1020. That was the high from yesterday. And just the other note on this is just consolidation can be as important as daily highs and lows. I know I talk a lot about daily highs and lows in my analysis. I just wanted to mention consolidation importance, iron period, maybe one of the few times where it's worth it to put a strangle or a straddle on and catch the movement without having an opinion. It's very important.
So let's see. GE has sold their commercial light unit, right? They've sold their healthcare unit, I believe. They've now sold this deal this morning, biopharma. I believe they've had a few other sales, but they've got a lot of assets on their balance sheets still. So you'd have to assume. I mean, this is a big price here, but if every time they sell anything, the stock pops, then we'll be back at 15 in no time.
That's a lot of million. I mean, 21.4 billion.
Yeah.
I mean, I don't even know what their total debt is, but I mean, reducing leverage, paying down debt. That's what everyone, has been urging the company to do. Also you look at it, from the perspective of people know they need to sell, right? Oh, yeah. I mean, so it's much harder to sell something when people know you need to sell or want to sell. So, hats off to the new management here. What is it? Larry Culp? Is he the guy that's in there now? I can't remember. They've changed so many times. But, crafting a deal when you have to do a deal out there makes things much more difficult. But nice move in GE. I mean, 1198. I'd go out on a limb and say it's going to hit $12 here.
So I mentioned that Buffett had made some comments this morning on GE. He'd also addressed Kraft Heinz, said he has no intention of selling or adding to his stake in the Kraft Heinz. That's reassuring considering the day they had on Friday.
Did he say why he wasn't adding?
I didn't see. I mean, he acknowledged that he overpaid and he probably misjudged the company a little bit, but I don't know if he said why he's not going to add or sell.
Okay. All right. Well, I mean, not a the kind of endorsement that you want to hear. I did see some other news that they were possibly exploring selling Maxwell House. I'm not a real big fan of Maxwell House coffee, so I'm not sure what that's going to do for the company. But down 37 cents, follow through. on the decline from yesterday. Big volume, big day. What was yesterday's low? 34.51. Keep an eye on that. See if they want to press that. You're only 8 cents away from it. We should cover DHR though real quick. Danaher trading at a new all-time high, up 752. They like this deal. Not worried about the potential negative effects. This is just a gorgeous looking longer term chart. If you are looking for a fade, I think Rob Hood maybe was one, or someone had talked about in the chat. We will go to your pre-market high here. Your pre-market high in Danaher stands at 121.80, but you have no reference point. This is a new all-time high for Danaher.
But going back to Kraft Heinz here, the fact that he said he has not sold and will not sell, that does something for me. That does something for me. That's reassuring to hear.
Okay. Do you own that one, Spencer, or not?
Yeah, I own a throwaway position, just some throwaway money.
The throwaway, yeah. That's pretty much what mine is too. All right, let's move on here.
Well, we have some M&A. We talked about the GE M&A. What about this M&A here from in the biotech space? Roche and Spark Therapeutics. Roche, which trades OTC, is acquiring Spark Therapeutics. Ticker ones for $114.50 per share in cash. Massive premium.
121% premium here. And looks like this deal, they like it. It looks like it's going through, at least is what the arbitrageurs are telling us right now, trading 10 cents away from that takeout price. ARB is probably going to be a little bit more difficult with Roche being traded on the foreign exchanges here. Do you know what they had in the pipeline? Do you know what they were going for? That was was there a particular drug, or was it just overall what they have in the pipeline?
You're talking about Spark now?
Yeah. Yeah.
I just know they have they do gene therapy.
Okay.
I don't know here. We can see what. Let's see a great reference for biotech news is Stat News. If you don't know them, I would check out what they have to say about this, because that's where Adam Feuerstein writes for now, and they're a great resource. But I don't know specifically what Spark has in the pipeline.
And the only other thing I would look at for this, and I did not look at it really the other biotechs, but maybe a company that they were competing with in drugs, this could be potential bad news for them. I don't have all the details on it, but take a look, see how the other biotechs are moving. But boy, that's a healthy premium there. Congratulations to any owners of Spark Therapeutics. I don't think it's a stock we've talked a lot about in the past, but huge takeout in the biotech sector.
What does PPT team mean? I don't know. That's Griffin. I don't really know what that means in the chat. So, sorry. Plunge protection team. I'm on the plunge protection team. Yeah. All right. An honorary member of the plunge protection team. Great. Good. I'm honored to be on the team. What else do we have on our list here? We got a lot to get through. Let's talk about Qualcomm here. Qualcomm is trading up on headlines that they launched a 5G, some 5G related products, not 6G, unfortunately, which Trump has probably preferred, but 5G is what we have to settle for now. And the stock is up on the headline that it's the world's first commercial 5G PC platform.
Getting a nice pop on this one. I think TT Mac is one that likes to be in this stock. You're starting to get into a gap area here. You did sneak over $54, $54.12 is your pre-market high. That fills the gap. I think it was from that negative report. I can't remember who that was. They came out with a negative report. They really just kind of rehashed a lot of the things that were already out there. 53.94. That will fill that gap from January 22nd. If you're looking for a next target here on the upside, the day before that negative piece came out and it's lost over $2. You had a high at 54.99. Now that's another buck. Also, Qualcomm, this China news is good for them, right? their exposure to China in their business. I think when I saw them Barron's, they really have a huge exposure. So, besides the actual Chinese stocks moving up, U.S. stocks that have exposure to China, good news for them all around. And oil, I do see it. It is working on a green candle here, folks. 55.70 stands as your current low, and that was within a whisker of last week's low. Last week's low was 55.66. So making a little bit of a move here, and crude oil off last week's low. We'll see if it can persist, get into the $56 handle.
So without really knowing too much about who, I just tried to look up some of Spark's peers, and without really knowing too much about the space, to be honest with you, just looking at a screener will tell you. CMTA is a biotech, but they also had some M&A news for them, so you don't want to look at that. But like looking at RG and X, just the stocks that are moving can kind of give you a clue as to, if you have no idea about which stocks are related to Spark at all, you can just look at a screener. And the biotechs that are moving, CRISPR is a big one, CRSP. They're up this morning, and I believe they had drug news as well. So just looking at a screener can just sort of clue you in as to which biotechs tend to move in the league.
Oh yeah, with a lot of them are moving. What was the one? And it's not MLNX, but it's four symbols. Obviously, had an M in it, and it took off MDNG or something. It took off to like from 7 to 24, and then pulled back. Chet, help me out here. Maybe I'll try MDNX. But I just was looking at the chart on this one last week, and it had the big run, and then it kind of came back to the area that it broke out from. So I know this will come up. Maybe someone will help me with that one. But yeah, keep an eye on your biotechs today. Big merger, big premium, and if you're short, I don't know. It's tough day here. Tough day to be short. I'm glad I'm not.
I want to do periodic looks throughout the show on China today because we want to be watched. That's the hottest trade of the day, it seems like to me. So, Joel, let's keep a close eye on the pre-market here and all these Chinese names. Huya's still up. Momo's still up. I mean, they're all still up. If they keep, so what would you do at the open here? So let's say
me what about on these things on the open?
No. Let's say they keep rising all throughout the pre-market session, and we hit the pre-market high at like 9:29.
Well, I mean, those are good reference points, either as like, okay, this move's a little bit overdone here. And you also, what you want to think about these stocks is we're not the primary market in it, right? They've been trading all night in China. So a lot of the price discovery, has been baked in. On Friday, though, I mean, you saw unusual moves. I would just keep an eye on that pre-market high, where your original target was. Like if your original target in Huya was 24.5 and you're getting 25.76 and you're following your rules, then take your profit. If you're trying to short this thing, or use the pre-market or after hours action as indicators, see if you could bust through those levels, because with some of the stocks that were moving last week, what were some of the big internet stocks that were moving on Friday? I mean, they went off through their pre-market high and they never looked back. So good parameters. Baba's taking off too.
I was about to ask you, what do you do with Alibaba here? Because it's on a bit of an uptrend but it sold off so hard.
Yeah, it's I bet you we're through the 50% retracement on this one. For Alibaba, 180. Just someone's hanging out here. I mean, there's a little price discovery just going under 182. You can see all the 15-minute highs since 7:30 have been between 181.35 and 181.78. I have to go back here on the dailies just under a nice area, 182.38. That was your August 28th high. So I'd call that potential resistance all the way from 181.78 to 182.38. And then, boy, that just stuck out as a sore thumb. 183. So pick your daily levels, see if they line up with the pre-market highs.
I'm trying to remember if it was on the show or not, where I was talking to somebody about the emerging markets, and then they were really bullish about emerging markets throughout as this year progresses and into next year. I'm trying to remember. I don't think it was on the show, but it really got me rethinking what I thought.
Who was that? Who was that?
Well, it could have been on our show, but I was so afraid of the emerging markets after the cyclical sell-off they had. But I don't know. Now they got me thinking about them. So, I'm looking at the EEM, for example. I'm looking at some Chinese ETFs because we know I prefer the ETFs. Every time I pick a stock, it goes down. But
you know what? I'll give you a nice level to keep an eye on here on the EEM. And this is from a monthly chart, so this is a good level. 43.51 stopped the EEM in September, and then you had a couple other highs just over 43. This current month's high is 43.46 here, so potential breakout here, and it really still has some room to go on the upside because it's had a move from 52 to 38. That's 14.7. 45 would take you to 50% retracement on that. So looks like a potential breakout here in the EEM over 43.50. I think this is usually a pretty slow mover though. It doesn't have big ranges, but I do like that level based on the monthly charts.
Hunter saying don't forget about KWeb. Yeah, that's the ETF that I came so close to buying and didn't. And I would have bought the top, so I'm glad I didn't buy that when I wanted to. But yeah, that's the Chinese internet, the Chinese internet A-share ETF. So if you want to play all these Chinese internet names at once, the KWeb is one way to do that. There are, of course, other ETFs. This is not the only one, but it's one that I almost bought this in like the mid 60s. So I'm glad I didn't. But yeah, there are a number of Chinese ETFs. I'm sure they're all going to be up this morning. And then the chat's really good here with our peers with regards to Spark, Cure, QURE. Unicure is up in sympathy off of this headline here. So keep an eye on that trade as well today. But
let's just cover one stock here for Star Trader.
Yeah.
NTES got hit, found some support at just below its former low of the move. So you're getting a nice head start on this one, trading up 593. So that makes it a whole lot easier if you're using this for a swing trade to lean on that 216.31. As far as daily levels go, if you're looking for a potential resistance area, your 2-day high is 230 even. That's $1.40 away. But then it really opens up over 230 here. 230.260 was your 3-day close, and then you don't have another high until 237.60. So if you're looking at net T's, also primary market not trading here, but nice boost this morning in NTES if you picked it up on the decline.
Yeah, we're getting a lot of ETF suggestions now in the chat. EEMV, which is one I've never heard of. I guess it's emerging markets with the minimum volatility. Not sure how that works. FXI, of course, is the largest one. You have Yin, you have Yang on the other side, CWeb, of course. So a number of Chinese ETFs if you want to play that trade this morning here, or I guess throughout the day as well. 8:29 here. We got about 5 minutes before our guest, Joel. Let's go back to the overall market. How are we doing here?
We are just, it's really quiet. We opened higher. We're just hanging here at the highs of the pre-market session. Just 2 ticks off the high. So still room to go on the upside here. We'll see what happens when more liquidity comes in at 9:30. But I had talked about the 27.94.50 level, which we cleared on Friday, cleared it and closed above it in your after hours. So if you're just going based on the daily charts here, 28.18 was your December 3rd high. That's another potential target, and 28.22 back is your November high. But very, very quiet here. For as much as the S&Ps are up, there's just no retreat here. Buyers are keeping this bid here, but we still got an hour to go before that opening bell at 9:30 a.m.
We talked about this on Friday's show, and then last night we had a specific confirmation on Newmont Mining and Barrick Gold that Newmont had received a proposal from Barrick Gold. It would be an all-stock merger is what Barrick is proposing, that Barrick shareholders would own about 56% of this combined company between ticker gold and NEM there. And I haven't looked at the charts yet this morning. Are they reacting to it?
They did. They got really excited on Friday, and they took this up to 37.63. But you weakened to close at 36.48. Still $1.07 gain on the day, up 47 cents here. So if someone's sensing a price here, or if there's no deal, 37.63, that could be a target. I think the longer it takes to get back over 37.63, and the less that you hear of a deal, more likely this could fade a little bit. You're getting into a big candle with yesterday's low at 35.83. We're still a buck away from that, but excellent support at 34.50. Those were Wednesday's and Thursday's low. People are still asking about GE here. And we hit a round number. We hit 12 bucks, 12.06. That was a high, so we snuck under there. We are now back at 11.69. So still early in the session, but now you got a whole number. You have a high in the pre-market. You have how much is traded here? 7 million shares are traded. So keeping an eye on the round number of 12 here, 12.06 pre-market high.
So with the round number, with the fact that the round number is the pre-market high, is it's
resistance too? And then the other thing too, and for me, that's why it would be very, very hard for me to buy this in the pre-market, because there's going to be a lot of sellers in the book here. I mean, you closed on Friday at you closed at 10.17. Right, so you had a tight range. Probably had sellers at 10.50. You have sellers at 11. You have sellers at 11.50. And all the increments going up. So let's say there's 30 million for sale here. Well, the specialist is going to have, the designated market maker is going to have to open at a price wherever he opens this thing. Let's say he opens it at 11.75. Then the people that were selling at 10.30 get 11.75. The people that were selling at 11 get 11.75 here. So there's good volume here. I'm not sure what's in the book. Not sure if there's orders canceling. But think about how much stock, how much volume would need to be traded in General Electric to move it $1.60 in the regular session. So we'll see. You'll have some shorts here, going to be doing some buying as well here, but a lot of orders in the book. That's sometimes you see a stock trading. Let's just give you an example here. It's trading 11.75 and right before the opening bell. All of a sudden you get a quick print at like 11.20, 50 cents below where it's trading. That's just a designated market maker taking the buys and sells, opening at a price that could fulfill the buyers and the sellers, and maybe take a little piece for himself here. So a couple different scenarios here in GE. I will tell you, if I did put a strangle or straddle on in this thing, I'd be trying to get out of the log end as close to 12 bucks as possible. Even if it's going to 13, 14, 15 someday, I think just for the short term, the volatility in the options is going to be really pumped up today, maybe for a day or two. And then GE will go be back to being GE, just sit still and trade in a range. Spencer, do you still have that tool that brings up like historical moves? Or
I do. Do you want to
maybe take a look at that?
Yeah, the last time we had a move in GE like this. Let me see here. The last time we had a move this high in GE was January 31st, when the stock rose 11.5%. So from the previous day's close. But today, what are we up today? 18%. So and you've got 1 million people underwater, 2 million, 10 million people underwater in this thing. So it's gonna be tough. It's gonna be tough sledding perpetually, you would think, here for GE. But let's take a break. It is 8:35. We're gonna go grab our guest. Her name is Eve Boboch. She's portfolio manager and market strategist at Roppell Capital Management. So we'll be right back here in a moment with Eve. All right, welcome back, everyone. We are now live with Eve Boboch. She's the PM and market strategist at Roppell Capital Management. Eve, how's it going this morning?
Great. Thanks for having me. So excited to be on the show.
Yeah, and boy, you picked a really, really good date to come on. I'm just curious. How did you find the show? How long you been listening to it? And what are your favorite parts of the show?
Well, you always have such great guests. And one of my mentors you just had on last week, Dan Zanger. I know you've had him on the show several times. And Dan has shared a lot of great information with me over the years. And I consider him to be a great mentor to me.
All right, Eve. And also, I just wanted to touch on your background. We won't go into huge detail on it, but you spent some time at the Fed. Tell us about the time you spent at the Fed, what you did, and what do you think of their current policy stance?
So I worked at the Fed up until 2011. I started in 1989, believe it. I must have been around 21 or so. Just kidding. And I had a great career there, worked in a lot of different areas. I started in the operations area. I worked in research, and I worked on the regulatory side. So it was a great experience, great colleagues to work with, really dedicated people that are really committed to the mission of the Federal Reserve, and just very highly intelligent people. So I had a great experience at the Fed. I left in 2011 and I started working for Roppell Capital Management. Jim Roppell is the founder, and he's a legendary trader. He opened the firm years back, and I'm working with him now as a portfolio manager at Roppell Capital Management.
What was your biggest takeaway from working at the Fed that you've used in your management style?
Well, I'm a portfolio manager now, and I'll say I do keep abreast of what the Fed is doing, of course. And I'm looking at whether they are dovish or hawkish. You know, obviously that's going to be either bullish or bearish for the market. But I use that as a secondary indicator. I really look at the primary indicators that I'm looking at is pure price movement. So I'm looking at what are the stock market indexes doing? What are the leading stocks doing? Are they moving up? Are they trending in the intermediate trend? Are they trending up? And also, what is my portfolio doing? So that's the primary indicator. But of course, with the Fed, they can either introduce liquidity into the system, and that would increase asset prices, or when they're reducing their balance sheet, certainly they're pulling liquidity out of the system. So that's something I'm always watching. And of course, I'm not going to try to fight the Fed if I see that reflected in the trend of the stock market and stocks.
Okay, so you're also an author, along with Kathleen Donnelly, Eric Krull, and Kurt Dahl, I believe, and you have a book out there. It's called The Life Cycle Trade: How to Win at Trading IPOs and Super Growth Stocks. I am sure that everyone here wants to know about that. So why don't we go to your very nicely put together here PowerPoint, and start with the summary here of the key to patience. Let's talk about the life cycle trader.
Well, thanks, Joel. Let me give you a little bit of background on the book and how it came about. I teamed up with three of my friends. They're experienced traders, and you mentioned their names, and I want to really do a shout out. Thank you for mentioning them. I was really lucky to work with such a great and amazing, talented team. And what we did is several years ago, we decided that we wanted to try to see if we could identify the next Amazon or the next Google early on. And we started a research study, and we never knew it was going to last for several years, but it did end up lasting for several years. And we studied super growth stocks, and we studied IPOs and how they behave. And what we found was really surprising. We studied over 1,600 IPOs. We started the study back. We looked back to IPOs that started in like 1982 through 2017. And I'll just share with you a couple surprising findings. More than half of the IPOs undercut their first trading day low within 3 weeks. That was like really surprising to us when we found that. You know, most people think that IPOs can perform very well, and some of them do, but really few stocks make large gains quickly from their IPOs, from their first trading day. If you look at it, only 6% will increase over 100% in the first quarter of trading. And really what we found is IPOs that advance quickly give back those gains, tend to give back those gains very quickly as well, and possibly undercut the entire advance. So it was very interesting to find some of these interesting statistics looking back at historical winning stocks. We also discovered that stocks trade in phases, so 3 distinct phases. And we named those the IPO advance phase, and then the institutional due diligence phase, and the institutional advance phase. And I think I have a chart there of a weekly chart of Tesla that is a good example of each of the phases. It shows you how a stock can move. So in this example, Tesla has their initial IPO advance, moves out of a little IPO structure, and that's the IPO advance phase. And then it moves sideways for a long time, sideways to down. And what we're saying there is institutions are doing their research, deciding if they're going to take a position in this newer issue. And we see this a lot in IPOs, where the institutional due diligence phase is like a corrective phase that moves for a long time, several months to several years, before it breaks out and then starts really an institutional advance phase where shares are being accumulated and a stock can really have a powerful gain in that move.
I have some questions here, Eve. So you talked about trying to identify the next Amazon or the next Google. Well, Amazon basically went nowhere for its stock. I mean, went nowhere for a decade. So how do you sort of navigate that when these stocks can take years, decades to really get going?
That's true. And a lot of times that's in the institutional due diligence phase. And what happens is these IPOs then fall off of most people's radar, and then they break out and people end up missing them. So one of the things that we mentioned in the book, and we've actually shared some of the screens that we've developed, it's very important to have a screening system for IPOs and keep these IPOs that look like they're going nowhere, going sideways, going slightly down, keep them on the radar and watch for when they form that first mature base, because that's usually the start of the more powerful move, when a newer issue can break out of that first mature base. It's usually then going to have an institutional advance phase. That's what we found. And we found that for that phase, it's more important to have longer term sell rules, hold rules. But for that initial pop, the initial move in the IPO advance phase, we found that it's more effective to have shorter term sell rules, because typically that advance gets undercut or it's a significant correction occurs at that point. Now, I think I also shared with you a chart of Facebook, which is an iconic example of one of the patterns that we discovered. We discovered like 6 different patterns. We looked at all of the super growth stocks, like the elite super growth stocks, and we were surprised to find like 6 distinct patterns. I showed you a weekly chart of Tesla. That was an example of what we deemed a late bloomer. Facebook is a great example of a pump and dump. What happens with a pump and dump, basically it's hyped by the media. It's a name that people feel they must have on day one. And what happens is with a pump and dump scenario, it comes public and almost immediately starts to fall. And this is a particularly dangerous pattern for newer investors and even experienced investors. As I mentioned earlier, it's important to have patience with IPOs. there's no reason to get in on day one. We found that in our research because so many of them undercut their day one low. So it's important to understand these patterns, and I think it helps. It definitely helped us as traders be more effective to understand these patterns, know what can occur, and be prepared for anything really in the market, but particularly here with a pump and dump pattern. It doesn't take off until months and months of institutional due diligence, and then finally breaks out and starts its advance.
I want to talk about these different screens you came up with here, and I assume they're different. You named different long-term patterns you observed in IPOs, but walk us through what each one of these means.
I'm sorry, and which one?
You have like late bloomer and pump and dump and one hit wonder and rocket ship, and explain what these all mean.
Okay, so I showed you an example of Tesla early on. That we deemed a late bloomer. And basically, that's a pattern where there's an initial move from the IPO structure, but then after that, the stock goes nowhere, usually sideways for a long period of time, and then finally starts its advance. The pump and dump, just like Facebook is the iconic example, it's almost an immediate downturn. And it basically, anyone that tries to buy on day one gets hurt. It takes months to come out of a first mature base and then starts its institutional advance phase. Then we also noticed that some stocks, and these are more unusual, more rare, they stair step their way up. So they don't undercut the initial IPO advance. And a great example of this is Google, where an investor could have bought them out of the first IPO structure. And then it was almost an easier hold because it stair steps its way to large gains. A rocket ship is just what it sounds like. If you remember eBay moving out of its IPO breakout in the late 90s, it was just an amazing move. So these are the stocks that hardly give you a chance to get in and have immediately very large gains coming out of their IPO structure. And then you have those stocks that are just kind of one-hit wonders. They move out and then they run for a short while. They may even have almost 100% move or so, but then they quickly fizzle out and go nowhere. A good example of that is GoPro. And then there's just those stocks that you really can't seem to make any money off of. They're just disappointments. They basically start to move lower right from the initial start, and then they continue to either move lower or sideways and never really give you a chance to make any progress.
Do you have opinions on newer IPOs? I'm asking specifically a question from our chat about Moderna, mRNA. Do you follow the newer names?
Well, we do follow the newer names in terms of our screens, but one thing I wanted to mention is the liquidity screen that we have. So there are many new IPOs. Like last year, there was 200 and some odd IPOs, but really only a handful passed the liquidity threshold. So the ones that we focus on have to have at least $20 million a day average daily volume. And the reason we pointed this out in the book, the research pointed to this. So the stocks that are more liquid, trading at least $20 million a day or higher, have a higher likelihood to increase over 200% than those that aren't liquid. And so right away, whenever we screen for names, we're not trading any of the thinner names. We're looking for liquidity. And then we're also looking for growth drivers. So we're not looking for these patterns in just any stock. We're looking for the exceptional companies, the real transformers. So the patterns are there to help us understand what the possibilities are and how to apply the rules, whether we use short-term fast sell rules or longer-term sell rules, but we're really looking for the elite. And the reason I mention that is super growth stocks are very rare. What we found is that only 10% of IPOs go on to increases of 900% or more, or 10 baggers, which is a term that was coined by Peter Lynch. So it's very important to be selective. We're not just looking for any company. And basically, we found also that it's really key to know what phase the stock is in so that you can apply effective rules. Like that quick IPO advance phase that I mentioned, if an investor doesn't have fast rules, it's typically very easy to round trip any type of move.
So just to follow up, you don't have an opinion here on mRNA?
No, I
Okay.
don't at this time.
Okay.
I just have a quick question for you when you're, evaluating these IPOs. How much emphasis do you put on the company or companies is doing the underwriting? When you have, Goldman Sachs and Morgan Stanley teaming up on something, as opposed to like, a firm like Can We Cheat Them and How? How do you put any separate distinctions between that when you're looking at IPOs to invest?
That's a great question, Joel. We didn't study that as part of our IPO research study, but personally, that's something that I've always watched for when I look at a potential new issue. The higher quality underwriters, that gives the stock definitely 1+. And so that's one thing that I'm looking for among many factors. So very, very good point.
And just to summarize sort of the key points that you put together for us, that few stocks make gains of 100% or more. Most stocks undercut their day one low within 3 weeks. Most stocks trigger a 10% stop loss within 10 weeks. Stocks that do advance quickly tend to correct and give back all their profits. And in the long term, only 28% of all stocks are liquid enough to trade. Obviously, everything we've discussed in this interview is coming. You're coming at it from a long-term investing standpoint, I would assume. Do you have any insights as far as what it's like to trade these guys?
Yes. Basically, when we're trading the quick IPO advance phase, we tested various rules as part of the study. And we simulated $100,000 investment in each of the Supergirl stocks. And we wanted to see which rules are going to be most effective for each of the phases. And we published those findings in the book. And the big reason that we wrote the book, I mean, we had done a research study and we didn't really have a thought that we would be publishing the research, but we saw a big void out there. We didn't see a lot of published work about IPOs, a lot of research about IPOs. And so we found that the research was helpful to our trading and we wanted to share that with others. So the big finding was that it's very easy to round trip these gains during that initial IPO advance phase. It's very quick. Money can be made, but you need to have fast sell rules. That's what we found. So that's helped our trading. And then once a newer issue comes out of that institutional due diligence phase and starts its IPO advance phase out of a mature base, that's a phase where, if an investor has high conviction in the company, that could be a longer term or an intermediate term sell rule application there. And we also published in the book specifics on which rules work better for which type of patterns. You know how I mentioned the late bloomer and rocket ship and things of that nature? We actually show the results for which rules worked better when trading each of those patterns. So that's something unique that we were able to do. Eric Kroll programmed the various sell rules in TradeStation and was able to show all the results. And the other thing that we show is the drawdown that investors would need to experience if they were to try to hold on to one of these big leaders. So that it's clear that in some cases, there are very large drawdowns in holding these big leaders or trying to hold them for a huge move. So an investor needs to be prepared for that if they're thinking they're going to hold for the long haul.
All right, we have been on the line with Eve Boboch. She is the PM and market strategist at Roppell Capital Management. Her book, The Life Cycle Trade: How to Win at Trading IPOs and Super Growth Stocks, is out. Well, she co-wrote, I should say, is out now. You can check that out. Eve, thanks so much for coming on. We really appreciate you talking about this with us. We don't talk about what it's like to trade IPOs or invest in IPOs long-term too much on the show. So it's great to talk to you. Have a good rest of your day, and we'll be in touch.
It's been my pleasure, and I just want to mention, I'm of course not an investment advisor, and any stocks that I mentioned are not buy or sell recommendations. This is really all for educational purposes.
Yes.
We found the research helpful, and we wanted to share it with others in case it might be helpful. And it's really been my pleasure to be on your show today. Thank you so much.
All right, thanks. Have a good one, Eve.
You too.
All right, 8:56 now, Joel. What?
I know that went a little bit long.
It's okay.
What great information there. A different perspective. We talk about, things in the market today, but it's good to get a longer term perspective. And we will get a longer term perspective IPOs. We're going to get Eve back along with her colleagues, Kathleen Donnelly, real soon.
Next time,
as I mentioned, I'm sorry, Spence. Go ahead.
Yeah, next time I just want to grill her on a dozen IPOs and get her thoughts. Get her thoughts.
Well, the funny thing was like when she was bringing up those patterns, I was like, okay, well that's Blue Apron. That's all the stocks, and you've seen those patterns. So it's good to break it down simple. S&Ps, as I spoke about, before we went on that interview, just no quit. Continue to make new highs on the pre-market session. 0775 stands as your pre-market high. So we'll see if you're any sellers. GE is backed off $12 here, folks. 1163, 1161, still a real nice gain. But I think for today, I think that whole number there is going to hold up at $12, or that at region as a high for the day in General Electric.
All right, I want to do a quick look at ratings just to go through, see which were the most notable this morning. There weren't that many. Norwegian Cruise Line getting another upgrade this morning. This time it's from Macquarie to Outperform. Honestly, there weren't a ton that really I thought mattered. State Street, one of several financial firms catching a downgrade this morning from Keefe. Briette and Woods, they're downgrading State Street. They're downgrading PMBC, PACW. So they're downgrading a few financial firms here this morning. First Financial as well. Allegiant catching a downgrade from Imperial Capital, but there weren't too many ratings that I saw that really would be too impactful on the stock here this morning. So a light day for the ratings. We find their biggest days are usually Wednesdays and Thursdays, and even Fridays.
Yeah, really?
For the ratings.
You think those are the days that they do the most ratings, and on Friday they take off for the Hamptons or something?
Maybe. Oh, here's a headline that I'm just seeing. I don't know if he just said this or if he was from earlier, but Warren Buffett said that this is funny. Said he sees Bitcoin adding no unique value at all and calls it a delusion. So Joel, I know you were talking about Bitcoin on the pre-market show between you and me. I don't look at this chart very often, but you said John McAfee said something. I'm sure he said lots of things. But...
He said it was going to 1 million.
Oh, okay. All right.
He said it was going to the 1 million, and trapped people here at 4,000. I'm not sure what the cash Bitcoin did, but the futures lined up there. You hear your highs, except for today. Your last 4 highs in Bitcoin were between, wow, that's really close, 39.65 and 39.90. So still, before it goes to 1 million, it's got to get through 4,000. So that's take a Bitcoin. For the S&P futures here, folks, continuing to make new highs at the session. If you have long targets and it's hitting your target, then go ahead and take it off. Don't have any regrets. This is some nice action. If you're looking at stocks that are moving in the pre-market, definitely keep an eye on the pre-market highs. My only other notes I was going to give you guys was, I thought GE was going to make a move one of these days, and that's after the fact Jack, as it broke out of that consolidation. The other stock that I just wanted to match, Twitter here, and I know you guys talk about it a lot. Dennis taking a few steak dinners from me on it. But look at this $32 area, man. It just dropped down off earnings, banging its head against 32 a couple times. So there, you have a nice gap fill to go here in Twitter. So that's what I'm looking at on the upside here. So 1 minute over, Spencer. Is there anything that you want to add? You want to wrap things up?
I think we covered just about everything on our list today. If you missed any part of our show, you can listen to our podcast on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play, or just rewatch the show on youtube.com/Benzinga TV. Thanks to our guest today, Yves Boboch. Thanks to all of you in both of our chats on YouTube and premarket.benzinga.com. The latter chat room is running throughout the entire day, not just during the show, so check that out there. As Yves mentioned, please remember that all the information from our show is for informational purposes only and not meant to be investing advice. Hope everyone had a good weekend. Hope you have a good rest of your Monday, and we will see you on Tuesday.